everyone, and welcome back to another episode of the Globe Talks with Traders series, where you can learn the ins and outs of crypto trading. I'm your host Sunlight, and today I'm delighted to welcome onto the show Evgeny Gokhberg, managing partner at Re7 Capital. So, watch on to find out about what Re7 Capital is all about, and also what are Evgeny's thoughts on the current market pulse. Now, onto the interview. Okay, hey Evgeny, how are you?
Hi, Sunlight. I'm good, thank you. Thanks for having me.
My pleasure. So, can you tell us a bit about yourself and how you got into crypto trading?
Yeah, for sure. I've spent about 10 years in London on the buy side, working in a hedge fund and then in banking, doing portfolio management. But that wasn't, risky enough, I guess, or dynamic enough. And in my spare time, I started learning about crypto, and I was lucky enough to come across Ethereum in about 2015, 2016, when it was still pretty early, and it was still possible to actually catch up with what's been going on in the space. And eventually this led me to join an enterprise blockchain startup that has been working on some supply chain traceability use cases. And eventually when I saw DeFi, I realized that this is, the holy grail of all of my dreams. And this is probably what I will be doing for many, many decades to come. And fast forwarding to today, I manage Re7 and spend all of my time in DeFi.
Awesome. So it sounds like your risk appetite is quite big, right?
Well, we're trying to balance it out.
So what's the most exciting thing about crypto in your opinion?
It's a very good question. I think the thing that probably fascinates me the most is how open it is. And what I mean by that is, if you want to set up a business in the crypto space, whether you want to run a podcast or you want to build a protocol or you want to deploy some trading strategies, you don't need to ask anyone for permission. You can just go and do it. And crypto is such everyone knows it's a fast growing space and all that stuff, but the mindset of people in the space is very open and they're willing to experiment. And that means that if you have some good ideas and you're willing to work for it, you can grow pretty quickly and much faster than what you would anticipate. And I think that's pretty cool.
Awesome. So you've had some crypto trading experience already. So what have you found to be your favorite trading strategies in crypto?
Believing in super cycle and hoping it will all be okay in the end. Realistically speaking, what we do as a firm is actually reasonably well. It's normal people wouldn't call it conservative, but crypto people treat it as conservative, whilst in reality it's not necessarily the case. But personally, I found that trading crypto, I found it to be very, very hard because it's there are no rules, it doesn't stop, and it's very hard for obvious reasons. So I found that personally for me, kind of a more passive, longer-term approach works better, where you just need to be comfortable holding some assets through the ups and through the downs, which is very hard as well, and you need to manage that carefully. But personally, that brings me kind of most comfort, I would say. And then for the funds that we manage, we take a very kind of structured, disciplined approach when it comes to risk management.
Awesome. So can you tell us a bit more about Re7 then, and your kind of key business lines and what you actually do?
Yeah, with pleasure. So I love my job because my job in Re7 is basically to be a DeFi power user. So we run various investment strategies, and all of them are on chain. And most of them are focused on running some sort of liquidity strategies in DeFi, where we provide liquidity, we lend, we underwrite insurance risk, we run some infrastructure for some bridges, we do some arbitrage. So basically market neutral strategies in DeFi. And all we need to do is basically get to know all these platforms very, very deeply, obviously, and then become their power users, which is pretty fun.
Awesome. So what would you say your kind of demographic is, like your target users?
Investors are people who they have idle cash and they would like to get kind of passive risk adjusted yield on their cash, or the same for ETH. those who are sitting on ETH and they would like to get some yield beyond the vanilla yield you can get elsewhere, this is where we come in and we give that kind of yield enhancement. We have, institutional fund of funds. We have individual people from the crypto world. We have venture capital funds, so on and so forth. We obviously, none of this is financial advice. That goes without saying. But we only work with professional investors, and anyone who understands kind of the value of risk management is probably someone who, was interested to work with us.
Oh, that's awesome. So, would you say that your kind of personal trading style affects any of the asset management that you do at Re7?
I think so. And obviously, trading is all about psychology, right? And we all have our very strong biases, whether they're good or whether they're bad, whether they are to be more aggressive or more conservative. But obviously, anyone's personal background shapes what they do with a portfolio. So, first of all, as a portfolio manager, you have to be invested in your own fund. Otherwise, why would anyone else, invest? You have to be comfortable with what you do, and you have to believe in what you do and be personally comfortable with that. So, yeah, absolutely. We have some strong boundaries in terms of how we approach risk and what we are willing and unwilling to do. And yeah, it all comes, from the heart, basically.
Absolutely. So I'm just gonna kind of nitpick here and say what you are and what you're not willing to do. Can I ask, what are the boundaries?
Yeah, that's a good question. So obviously within our kind of DeFi, realm, what we would not do is, if someone spins up some new chain with some crazy farm with some random stable coin that's giving you a gazillion, percent APY, we are very much likely to let it go and not rush into that. So the funny thing about DeFi is, at first when I just started kind of playing with it a few years ago, it felt like a video game. These are crazy numbers, and it's like, like a Mario, you go and hit the bricks and, dollars come out on the other end, or you get eaten by a monster.
Yeah.
But obviously, as the space matures, like we think about smart contract risk and all the other risks like a boring traditional financial institution, where you realize that even if you can get some nice yield, if 24 hours down the line you get hacked, then guess what? All your money is gone, and the yield doesn't matter. So we're pretty strict and pretty cautious when it comes to deploying that capital on chain. And yeah, these would probably be our main kind of boundaries.
Well, can you tell us what your favorite kind of projects are or tokens are at the moment? Obviously, not financial advice again.
That's a good question. And again, not financial advice at all. But personally, I was surprised how weak ETH has been trading since merge. And obviously, a lot of that is macro. Allegedly, it's the miners who've been selling some ETH to whatever, get out of that. But personally, I'm very much excited about Ethereum. It's, as DeFi users, we get to see what activity happens on different chains. And it's pretty interesting to see that the majority of innovation, in our opinion, still happens on Ethereum. So we see how actively used it is. So I think, taking that in combination with a whole new tokenomics, not really tokenomics, but, supply demand structure, I think that's pretty exciting. But at the same time, completely realistic that in this macro environment, like it can go down 50% over the next few weeks. And I don't think any of us would really be surprised. So that would be kind of L1, still very much excited about Ethereum. When it comes to projects, it's obviously super fluid, right? So we've seen, DeFi 1.0, 2.0, 2.5.0, so and so forth. So things are very, very fluid. But personally, I just like betting on the leaders who have been consistently strong in keeping market share. And obviously in every niche, it's a specific player, right? So you have the Uniswaps of this world, you have the Aves and Compounds and all the boring names. But it feels like now is the time to stick to the boring names, so to speak, which can still grow a lot fundamentally if DeFi really picks up. And then when the market normalizes, you can go kind of more aggressive and, and more dynamic.
Awesome. So what I'm getting is really, in bear markets, you should stick to the more, I guess, the more majors and the more well-known coins, and then maybe in a bull market, that's where it's the time for altcoins to shine. Is that what you're saying?
Yeah, of course. I think that's the case. Obviously, with some caveats around that, because there are times to be cautious and there are times to be aggressive. And if one believes that we are, in the middle of a potentially prolonged bear market, then it's all about capital preservation and just having enough dry powder to then, go big, so to speak, if and when the tide eventually turns. But yeah, caution is probably prudent right now.
Of course, yeah. And can I ask, so how have you personally fared this bear market so far?
I'm pretty sad. Yeah, it's obviously been, it's not the first bear market we've experienced, and it's probably not going to be the last. So as always, when it happens, it's always, sad that you didn't get to where you wanted to get to, and so on and so forth. But I think one thing that really surprised me is how quickly liquidity evaporated from all these altcoins and from all these DeFi protocols, because the space really shrank, like big time. And therefore you have this kind of double whammy that people are leaving DeFi, so therefore DeFi projects are, they have less traction. And then not only do their tokens go down more because they're liquid, but also fundamentally they're becoming weaker. And it's not necessarily a death spiral, but it's like a big washout, right? Where like personally, you might have been very excited a few months ago, and now suddenly no one is using these things, even though technically these are good projects.
Yeah. So why is it that it kind of comes in waves, like the usage of these DeFi projects?
Well, that's a very good, $1 trillion question. So I think there are a few things, right? So if we talk about, let's say, retail, right? We're now in a situation where global inflation is really, really bad. And, our energy bills, food bills, utility bills are all going up. Some people are facing with either unemployment. They're faced with either unemployment or just shrinking kind of income. And then, your income goes down, your costs go up, your disposable income is out of the window. The last thing you're going to do is take your savings and, gamble with them in DeFi. So I think as long as we have that challenging macro environment, it's reasonable to expect that your average retail user will be smaller and less willing to go and venture very deeply into DeFi. And then the institutional side, we had a very classic credit crunch, right? With the events that we experienced in May and June, with all these big names, well-known names going under. It's exactly the same thing that happens in traditional markets when a large firm blows up, because the credit dries up, and then it becomes a spiral, because everyone has a little bit of a bit less, and everyone takes a little bit of money from the game, and it has like a multiplier effect because everyone is doing it. And a lot of it was on leverage, as we now have seen. Personally, I was very surprised to see how much leverage some of these names that that blew up operated with. Was really obviously it was shocking for everyone, but it was crazy to see that most of DeFi flows were like two firms which blew up with billions and billions of dollars. So when you take that institutional and credit washout combined with weak retail participation, you get basically a real winter in traction, which obviously then leads to poorer valuations.
Yeah, absolutely. And there's nothing you can do to stop it, really, can you? Because when crypto right now is so coupled with the traditional equities markets, it's very difficult to avoid that. But do you feel like in the future, crypto and traditional equities markets can decouple?
It's a very good question. I saw a chart somewhere on crypto Twitter a couple of days ago that correlation of ETH versus Nasdaq is like at 1, basically, at all-time highs, which is the opposite of what we all want. It's really hard to say whether it will decouple or not, because in the bear market, correlation always goes to 1 across all asset classes. In order for crypto to decouple, it needs to grow so much faster than the rest of the world, because if stocks are going down and everything else is bad, you can only be up if you're fundamentally growing a lot, which again is very hard to achieve in crypto. So I think it's probably fair to say it will stay coupled, so to speak. But with assuming we again get to some bull market at some point in the future, I would still expect that crypto will radically outperform other assets. And again, not a financial advice, but I think fundamentally there is still a lot of growth left in our industry. And yeah, you might get this coupling down when things go down very, very badly. But then when it grows, it can stay coupled direction-wise, but something can grow X% and something else can grow, 10X. And that, I think that's what we as a crypto community probably hope for.
Yep. So it's kind of like if the normal markets drop, then crypto markets will drop even further. And then if it recovers, then crypto will recover even more. So is that kind of normal for crypto markets?
Well, that's how it worked historically. Now, obviously, we're, again, not to go too macro, because who knows what's really going on there. But we're now in a fundamentally different macro regime, where the cost of capital has been substantially repriced, right? With the rates going up where they are, and with the rates staying higher, I think there is a scenario where everything else recovers and crypto doesn't. That's not the scenario I believe in or choose to believe in, but it's feasible to assume that, because when your capital, when the money is no longer free, it actually costs you 5% or more to, borrow your money from wherever in traditional markets. It translates into higher cost of capital for everyone else, especially in crypto, and that creates very different dynamics for everyone in the crypto space, which can lead to some stagnation in valuation and prices.
Exactly. Yeah. Thank you. Going forward in 2022, what are your goals for the rest of the year?
So we're going to keep building our own tech as a DeFi firm throughout this bear market, however long it lasts. We're seeing some interesting arbitrage opportunities when you go really, really deeply into DeFi across various platforms. And we're actually hiring very actively for quants to work with us on that journey. But basically our plan is to become even more deeply entrenched into DeFi technically, so that even when the next wave up comes, we could be well positioned to capture a lot of opportunities.
Yeah, awesome. And, best of luck with your hiring. I know it's difficult right now. So let's give our audiences a little bit more information. Where are you looking to hire?
Anywhere. So we are we're remote first. You have to be in this industry if you want to succeed. And we're looking for people who have traditional quant experience, and ideally at least some knowledge in DeFi, which obviously we can help with, to deploy algorithmic strategies on-chain, and whether it could be on-chain or arbitrage between on-chain and off-chain or whatever else, but basically for people who can take initiative and take ownership of what they're doing and co-create this with us.
Awesome. Yeah. And how important is passion for crypto then?
That's a tricky question, obviously, because that's probably thing number one. Right, because crypto is 24/7 and it's physically very, very challenging to stay up to speed. And you will only do this if you're truly and genuinely passionate about this. And it goes beyond just being interested in trading or gambling. It has to be more than that. Otherwise, you'll just run out of energy. So passion is probably requirement number one.
Yeah, absolutely. And actually believing in the use cases of crypto, right?
Absolutely. When we were setting up our shop, a lot of people were questioning what we do because, why would you go and, put your dollars into some food coins and and all those crazy things? It sounds crazy when you talk to people about this, magic internet money. So you have to you have to accept and realize that a lot of this is obviously, Ponzi / hyped up / cynical, but you have to believe in the fundamental use case. Otherwise, you will not be able to, basically live with yourself. So yeah, you have to believe in what you do.
To speak more on Ponzi's, how can you determine what is a Ponzi and what's not?
That's a good question. Well, there are obvious cases, right? So let's say something like Uniswap, where you get no token inflation, and it's just a protocol that provides a service and collects transactions, so to speak. That's clearly not a Ponzi because they're not trying to seduce you into anything. And there are some others which I don't even know which one to name, but it's a protocol that just prints tokens and the team just dumps them eventually. That's clearly a Ponzi. So I think it's probably a combination of a few things. One of them being, utility and usability of the protocol versus the tokenomics. So, if we talk about something like Curve, it's a very interesting example because it's a protocol with, tens of billions of dollars sitting there and going through it. But at the same time, it prints its own tokens. So then you can argue in one way, okay, it's a good product, it makes money, and yeah, they incentivize some liquidity. Or you can go the other way and you can say, well, they're printing their tokens, and that's why they have all this flow. And the question in my mind the answer to the question is, as a protocol in DeFi, most likely you have to subsidize the initial growth, unless you get very lucky. And the question is, can you outgrow that? Can you get to a point where your real flow is so strong that you rely on these incentives less as percentage of your flow? And if you fail at that, ultimately you become a Ponzi because it's just money printing, or you become a viable product. But I think ultimately it all comes down to intentions, right? So when you talk to the team that builds something and you get to really know them, you can form a view as to whether you think they're here to build a business or if they just want to, print tokens and run away. And that usually defines the outcome of the whole process. So a big part of what we do is getting to know all these founders and getting to know them very well, because otherwise you're shooting blind, which is rarely a good idea.
Right. So kind of stay away from Undoxxed development teams is one way.
Generally, yes, but there are exceptions to that. Because sometimes what we've seen is that someone may be undoxxed, and yet through references and through knowing them for a long time, you can form an assumption that they are still kind of genuine and legitimate. I think we're entering this era where being doxxed isn't a must to succeed, which comes with its own complexities. It comes with a lot of freedom, but it comes with new challenges, which is why crypto is cool, because you get to experience new things.
Absolutely. Was there anything else that you wanted to say to our audience?
Well, probably the main thing I can say in a tough market like this is, stay strong, believe into what you're doing. And, while applying caution, it's very important to balance out, long-term belief and the desire to stay versus challenging yourself and asking yourself, are you willing to ride this all the way to zero? And if you're not, maybe be a little bit more cautious. But probably the main thing I can say to the audience is that they should, check out Re7 Capital, apply, and join our team.
Thank you so much for watching this episode. And if you like the content, don't forget to give us a like, comment, and subscribe. If you'd like to try out all the different trading strategies that Evgeny just mentioned, be sure to check out Globe Exchange. Happy Globe trading, and I'll see you next time. Bye.
Thank you.